Computer Trading Market Technicals morning call video for Monday, September the 30th. Another down day in the markets. Dow down about 70, Nasdaq down almost 6, S&P down almost 7 points. Russell still holding in there, down about 4.25 points on Friday. Again, markets were down, and they were down on low volume again. However, this is getting really interesting now. We are in the last day of the month and the last day of the quarter. Window dressing is always apparent. It's always around us at the last day of the month and or the quarter, especially the quarter. We do have this fiscal cliff issue that we need to address, and I think over the weekend they should be stating something, and then of course they need to either increase the debt ceiling. I believe it's in another week or so after that. So markets are going to be jittery going into the weekend, but I do think that the markets are eventually going to be poised to be moving higher. We are in seasonal weakness, and I mentioned that the last couple of weeks, and I said, guys, look out because this is a notorious time the markets are ready to pull back, at least give us an excuse to pull back, okay? Now with the fiscal cliff back in the spotlight, it's a great opportunity to take profits. So what would we be doing? We want to take the best setups when we're day trading, and that goes without saying. If there's not a best setup, cash is a position. Continue to look for the best setup that you can until the markets kind of realign itself. Now, as far as swing trading, sure, you could take a swing trade. I wouldn't mind taking a swing trade, but if you're going to do that, you're going to be buying strong stocks or shorting weak stocks. Shorting right now, you're almost 6 days out of 7 days down. Really, risk reward wise, really to me, it's not in my trading plan. Maybe it is to others, but I like to really capitalize on when it's really aligned properly. Now we are seeing some cracks. We are seeing we have some new developments in our indicators, and the markets can actually continue to go down and roll over, really. And if the markets break this area where we've been holding, I'll show that to you in the chart segment, I think you're going to get a big flush. Then is when you want to be looking to enter or adding to your long positions. Not until then. We do have a few more weeks of seasonal weakness, and again, it could dry up and the markets could roll back up again, but why add more to your position when you can buy them at lower prices in the next coming days and weeks? So be patient. The dollar looks to me, and I put out a little excerpt on the thoughts of the market. I do think the dollar is ready to really muster some good movement to the upside, and when that happens, a lot of the forex markets will follow suit. I still like the euro dollar short, just waiting for an opportunity to let it break down and back test, and then I would look to get short the euro dollar. You could play that with the FXE, the ETF, but I am seeing some good movement starting to happen here, and I think that's going to be the dollar. When the dollar really starts to break out, that's when you're going to see movement in the currency markets, movement in commodities, and of course equities as well. Okay, so let's go right into the indicators here. Now we have in front of us the New York Stock Exchange 52-week new highs. What's happening? Markets are moving up, and our 52-week highs are starting to make new lows. Lower high, lower high, lower high. And we haven't even gotten a chance to get back up to the upside. So this is definitely a big red flag. We do not want to see that. We want to see the markets move up, and we also want to see the markets, the stocks actually start making new highs as well. So this is actually definitely something that you don't want to see if you're looking for the markets to move higher. We have the NYMO, and we're still in the range here. So we still have plenty of room to run to the downside that we can really be oversold. And or to the upside if we were looking to get overboard here. But right now we are still neutral, so not really giving us much of anything. Here is the tick. Tick actually increased. End of day tick, we're still above 0, so that's still quite bullish. The NASI, Summation Index, still on a buy signal, guys, so just keep that in mind as well. This is a very reliable indicator, and it takes a while for this indicator to start to roll over again. So we are not even overboard in our RSA 5 and our CCI 20. So this is still on a buy signal. The NASI, right, the NASDAQ Summation Index, also on a buy signal here. So again, a lot of good stuff, but we are seeing some cracks in the walls here, and one of them is going to be the XLF. I do not like the banks. Banks need to start participating, because if they don't participate and they really start to falter, we are on a sell signal on our bullish percent financial sector. So this went on a sell signal on Friday, and Goldman is making new lows. So this is not pretty. This is not what you want to see. And if you can see the XLF, this is clearly defined. You can see a head and shoulders pattern. Head, left shoulder, right shoulder, neckline coming in at just under 20. So this is something I'm going to be looking at very, very closely. If we don't get a chance to break back up to the upside, I think you're going to have an opportunity to retest the lows here at 19. And I do not like the way Goldman is acting. I do not like the way JP Morgan is acting. So very interesting developments, and that is a real bad development coming in if you really are a bull and want to see some higher prices. Now again, we could test the lows here or anywhere around it and start to roll back up again, but this is definitely not good in the immediate short term. Okay, so let's take a look at the VIX, and we had our VIX start to break higher here. So now we did break out of this little cluster area. So this area here, we really need to watch and be patient. If we could see fear coming into the markets really quick, and you could see a real big spot, a real big pop to the upside. And again, when that happens, look for this type movement outside the Bollinger Bands, close back in the next day. That would give us a buy signal that equities have indeed basically put in a short-term tradable bottom. Okay, CBOE closed neutral again. We've been in this channel since late July, so this is still neutral. We haven't seen really too much fear come in. If anything, more complacency than anything. So, that's not really good too as well. I'd like to see a big flush. Maybe we get the flush tomorrow. Today, tomorrow, and then we go from there. But again, it's going to need a catalyst, and that could be the fiscal cliff, guys. So just keep that in mind. Okay, gold, as you know, I would like to short gold back at the 139, 140 area, right up around this area here, or at least a retest or a lower high from this previous high. And then I would, for a trade, look to get short. I wouldn't look to buy gold until you get a big flush to the lower. Gold is in a bear market right now. We mentioned that. I showed those charts to you last week on a monthly chart. So bear is definitely gold is definitely in a bear market at the moment. And here's the USO, and I mentioned quite a bit of times, I do not like USO short at all here at these levels. I would not want to be long USO at these levels, especially when you have the Syria conflict starting to calm down, and now they're negotiating in talks. The fear premium will obviously be let out, and now we're going to have regular trading in oil. I still wouldn't buy it now down here, especially what's going on with the fiscal cliff issue. We need to really get that resolved and see what happens. I'd be a better buyer on a big flush lower to the 200-day moving average. Anywhere in this area here would entice me to get long, or at least for a trade to start looking to get long crude oil. And let's take a look into the sectors and our indexes. S&P weekly, again, the weekly chart looks fantastic. Higher low, higher low, higher low, higher low. And we're just bouncing around back of the channel here. So the weekly chart still looks fine. Very constructive to the upside. And of course, obviously that could change. But at the moment, we're looking okay. Now, here's the daily chart. I put in that little downtrend channel, actually looking like a bull flag here. We are above the 20 and the 50, and we're going to need to hold that. If we do break that, I could see 1650 easy, and then of course this lower high here from this previous low, from the June 24th low of 1628. So careful, guys. Just really need to be careful here. And again, I would be looking for the best trade setups. There's nothing wrong with trading long in a market that's weak. You just need to find relative strength in order to do that. Now, personally, that's what I've been kind of looking for intraday. Because 6 out of 7 days down is not really a good risk reward to look to get short at these levels. Not that the market can't go lower. It's just I'd rather see some green before I look to get short into any type of resistance. Okay, Spiders monthly. We're still at the upper end of the channel. Now we did right now. The September going to close tomorrow. More than likely, are going to be within an inside month of the previous month. So really no movement. We had really no movement actually in the last 3 months. So something to keep an eye on in the Spiders. Again, Spiders looks exactly like the cash. We are making higher highs and higher lows on the weekly chart, so still kind of constructive here. Daily chart, holding by a thread the 20 and 50-day moving average. We did get a little bit of a pop-up Friday afternoon towards the end of the day, but still, guys, you can see this is very, very weak here. We cannot rally. So this is something's going to need to happen here for this market to actually move higher. 30-minute chart, we've been in this range for now almost all week, as you can see here and here. So the Bollinger Bands are pinching. A bigger move is going to happen, so be prepared. It doesn't tell you which way, but be prepared, guys. A bigger move is going to happen here in the 30-minute with the Bollinger Bands on the Spiders. Here is the 15 just to show you basically we've been in a trend, sideways consolidation, slightly lower pretty much most of the day. So day trading's been very, very quiet, but there are opportunities. You just got to keep looking for them. Here is the Diamonds Daily, again holding by a thread, the 20. We're below the 50, definitely one of the weaker of the 5 indices that we follow. Here is the IWMs holding up strong. This one is definitely one of the stronger ones. IWM holding up. We've been really in an inside day pretty much for the last 6-7 days here. Really no movement. That tells me energy's building. Be very careful here. We can actually really break out or break down hard in the coming days here. So we'll see what happens. And again, if we get some bad news over the weekend, I say look out below. Transports, again, holding above the 20 and the 50, but just barely. Small doji candlesticks here, guys. This is not what I'm looking for. I want the leader to take a leadership role and to start rolling back up again. This has not happened. If anything, you might get a dead cat bounce to retest the upper end of this trend line. But, again, this is not good. So we do have a lot of cracks starting to form here, and we really need to be careful going into the trading session, going in on Monday and Tuesday. Here's what I'm seeing. Goldman, our leader, right, in the bank sector. What they say, if Goldman goes, so goes the market. Making new lows, actually down 7 out of 8 days. This is not good here. This is not what you want to see. Now, it is on low volume, okay? To make light of it, it is on low volume. But again, guys, this is not good. XLF, we showed you the XLF chart here. Take a look here. You can see the head, left shoulder, right shoulder. Neckline comes right up in here. Cross that right around 1994. And if that goes, and again, I think you're going to get a good flush down to this, at least this low, if not the 200-day moving average. Apple weekly, haven't showed this chart to you in a while. As you can see here, Apple really needs to prove itself. We're going to get back above 506, and then we could take a run higher. If not, I'd say look for lower prices down in this area here. Let me show you the daily chart. This is definitely something that you get chopped up, but I would not be looking for much of Apple here unless you're just day trading Apple. To me, this is a very sloppy pattern. There's really no pattern at all, to be honest. I think a dip lower, you could try an entry here long or a breakout above. But with the markets really in lackluster direction with slightly lower prices, I would just kind of stay away and let this thing rebase itself. Now, the big cap tech has been doing quite well. Now, the weekly chart of the Qs doing well here, as you can see. Not bad. We had a nice movement in the last several weeks, and now we're just kind of standing here, just kind of stagnant at the upper end of the range. So looking okay. Let's see what happens here going into the next couple of days into the end of this week. And if the fiscal cliff could get resolved, remember what happened back in November, right, guys? I'm sorry, December 31st, December 30th, last day of the year. We had a big jump up. And then the market rallied, and we saw a rally for several months. So remember that, okay, going forward. Here's the daily chart of the Qs. Again, holding up relatively well. The Qs, the NASDAQ, and the IWMs, which would be the Russell, are the two strongest sectors, two strongest indexes that we're watching right now. And that's something that you really need to keep an eye on. And with the financials starting to break down, and you have the S&P starting to break down as well as the Dow, that's not a real good sign. Indicators are pointing lower. The longer-term indicators are still intact, but we really need to be careful out there, okay? Please use your stops. Trade the best setups. If you start losing money during the day, it's very hard to make it back in this type of environment that we have now. So let's see what happens. Hopefully they come out with some sort of an announcement that the fiscal cliff has been resolved or at least postponed, and that you'll get yourself a quick little bid, a quick little run-up in the market. If not, I would see lower prices going into Monday morning. Have a great day, and we'll speak to you tomorrow. Take care.